Next speaker is going to expand on the future of the marina industry and CEO of the largest owner and operator of marinas globally. He's a man that certainly knows the landscape. Please welcome to the stage the CEO of Safe Harbour Marinas, Baxter Underwood.
Good morning. I'm going to find out if I have a slide presentation here. It looks like I do. I've been thinking about what I could say to this group that would be worthy of your time. I've got friends from my neighbor and friend Brian Redmond, all the way from Texas, to my great friend and colleague all the way in Riyadh, Haitham Fekri, and probably everywhere in between. And I was asking myself before I put this presentation together, what would be worthy of your time? You know, I've got 20 minutes here, and I'd like to leave you with something of a gift from my perspective. It's just one perspective. I don't have the global perspective that we together have, but I realize that that's what I can do, is I can add one point of view that maybe helps you put yours into context, and that we can move the industry ahead together that way. So that's my attempt. It's an ambitious attempt. Excuse me. The question that I would like to answer is, from my perspective and one part of the industry, what is the greatest challenge and also opportunity that we all face together? Over the past 10 years, the organization that I work with has reached out to the capital markets 5 times, and each time we have had a new group of investors who are completely new to our industry. Each time they have commissioned a very expensive study of the industry to try to understand what is it that makes it work and what could it be doing better. Through the process of looking through their eyes each time, I've learned something, and those studies have come together to form a sort of a narrative that I've come to believe is true for all of us. Some of the data that I'm going to go through is from those studies. It's private data, I footnoted it, but we've put it together for private investors, but I'm going to share it with you for the first time today. Much of it is based in the United States, but I think it is also, because it's broad social narratives, it's also probably applicable to Europe and beyond. And I think it does a nice job of painting the picture that I want to paint for you, which is that the industry has grown at a much smaller percentage than it probably should have, probably could have, and probably will. I'm going to look at the time period of the last 20 years and the next 10 years as kind of my frame of reference. And I want to make the point to you that together we can achieve a much greater outcome than we've seen so far in our immediate history. So the first thing that we've looked at as an organization is social trends with respect to wealth. It turns out that since 2005, the ultra-high net wealth category, which would be the majority of our collective consumptive base, has increased at about 5x over that 20-year period. So said differently, every 4 years, this group is doubling in size, which is a macro trend across the globe, which has to do with a lot of things, but in particular has to do with income inequality and the creation of monetary supply. So these things are driving wealth creation, which as one factor should be impacting all of us in our various parts of the landscape of the asset class. Secondarily, there is a simultaneous trend of population growth on the coasts. Now, this data that I'm showing you on the right-hand side is coastal population in the United States, but as we look across the continent of Europe, it's very similar. Since that same period of time, as the ultra-high net worth population has increased 5 times, the population growth on the coast in the United States is up more than 11 million people. To put this in context, that's about the size of the city of New York and the city of Los Angeles over that period of time. They are coastal cities, but relocating entirely to the coast. Those 2 things should be a fantastic thing for the marina industry. Next, if you look at the propensity to spend, we find that over that same period, people are much more likely to engage in the spendings in goods and services, principally in the types of goods and services that we all offer them. They are 3 times more likely today than they were 20 years ago to spend their money on luxury experiences. They're similarly 3 times more likely today to spend their money on luxury goods. I would offer to you that our asset class sits at the intersection of luxury goods and luxury experiences. We fundamentally, and I really appreciate the way Frank opened up the session this morning, we fundamentally are one team offering a experience that is probably difficult to replicate anywhere else on the globe. And in fact, the experience that we're offering is not one marina experience versus another, one vessel versus another, but one type of experience with our time and our money versus another. So these people who are spending on experiences maybe have a second house or a third house somewhere. They may be spending on a ski vacation, or in our case, they may be spending on a waterfront experience. It may be hospitality, it may be boating, but those are the types of things that we should be focusing our lens around together, as opposed to competing on this type of vessel or the other type of vessel, this location or the other location. If you had given all of this information to an economist in 2005 and said, this is the way that the population is going to move over the next 20 years, this is the way that wealth is going to be created over the next 20 years, here's how people are going to think about spending money over the next 20 years, and ask them to project how the boating industry would have performed, they probably would have told you that they expect it to at least keep up with the propensity to spend on experiences. They probably would have told you that you'd see a 300% increase in the spending in our asset class. I myself, as someone who likes data, would have probably tried to marry the population move to the coast with the propensity to spend, and I would have given you a bigger number and said, we can expect our asset class, the boating industry, to outperform other asset classes because people are moving to us. And they have told us this is what they want to do, and they're more capable, 5 times more capable now than they were in 20 years ago to spend on this. In fact, that's not at all what has happened. If you look at, this is the spend in boating year over year over that same 20-year period, it turns out that the increase in spend, and this is across all areas of boating, this is the purchase of Ferrettis, this is the service of Ferrettis, this is the refit, this is marinas, this is fuel. It turns out that the global spend in boating is only up about 50% over that same period of time. Compounded, that's 2% annually. That is less than the cost of inflation, the cost of euros, the cost of dollars for everyone in this room. And it's a real head scratcher at first when you consider the backdrop of the change in societal behavior that this is what we have seen as an industry. Lest you think it's just on the side of boating, I wanted to point out for most of us in here, we have marinas and we have exposure to slips and we have exposure to number of vessels. So in the top chart here, you have the increase in the number of vessels. That's about 2.5% per year over the 10-year period that's shown here. The bottom hand slide is something that's quite sobering to me as a marina investor operator, and that is the global supply of marinas. It has increased, probably for the right, by the way, at about just a little bit under 1% per year over the past 10 years. So if you step back from that for a second and say the global spend in our asset class is growing at about 2.5% per year, actually on the slip side, if you were operating a marina, as I'm operating several marinas, you can't really expect, unless you're doing something unusual, to get more than about a 1.5% return each year on that marina, which is not terribly exciting. If this were the case, you would expect the boating industry not to have performed very well from a returns perspective, and in fact, that's exactly what we've seen. On the board represented here are the most easy to identify daily valued businesses in our asset class. Those are 3 publicly listed companies in the United States. One of them is here. These are professionally run, very serious, very well-run businesses, and I can guarantee you they had great strategy and great execution involved in operating these businesses over the past decade. Nevertheless, what you see, if you look at the valuations over the past 10 years, is essentially that they are flat. In fact, if you go back and look at them in light of inflation, the EVs, the enterprise values of these companies, these publicly listed stocks, have failed to outrun the cost of money during the past 10 years, which is not a good outcome. But I think it really gets back to that macro dynamic about boat sales, services, and all of the other amenities that we service as an organization, as an industry. I did not have the chance last night when I was speaking with Alberto to talk to him about his presentation, but I'm so glad to follow him because I believe that what he said was a perfect setup with the proposition that I would like to make to you today, which is that our experience at Safe Harbor is very different than this one, and I believe it's for the following reason, which I would like to propose to you is the greatest opportunity for our entire industry to achieve the type of growth that we should have achieved over the past 20 years, over the next 10. At Safe Harbor, we have had about a 35% rate of increase annually each year since our inception. That has come in two forms. As you step back from that, that's a stunning number, but it's come in two forms to be fair. One form is through investment. So Alberto rightly points out that it is the desire of the boating population to pay for better experiences. That's why they're there. And we have found that when we invest in our properties and we add new locations, they absolutely will pay for it. And they absolutely, which I'm going to show you in a minute, will also stay in boating longer and participate more because they're getting more value out of it. So this is a virtuous cycle, and the top line there represents the returns that are coming from the investment into the marinas and new marinas. The bottom line there, though, represents growth that is what I'll call organic. So that's growth that has happened on its own. To break this down, the little white bar that's probably hard for you to see on the far left-hand side of the business is our entire earnings in 2016. So I was last here with you in 2018. 2 years before that, we had our first full year of operation, and we did about $25 million worth of earnings. Over the next 10 years, we have 400% of that initial business just in organic growth. So that is not in investment, not in new assets, just in the willingness and ability of the existing base to pay a little bit more to stay in the business a little bit longer. That comes in the form of occupancy, that comes in the form of more spend, it comes in the form of hopefully different types of spend throughout the business. And this is something that I think is available for the entire industry should we do what I think we can do as an industry, which is to provide a better overall experience. Similarly, we saw in the valuation that accretion. So when I was last with you in Athens in 2018, we had just been through a first full year with a new capital partner, which was then was a family out of Kansas in the United States, and we had a valuation of about $1.2 billion on earnings of about $100 million. This year, we've just been through about a half a year with a new capital partner, and the valuation was, roughly 5 times that amount, and the business has continued to grow. The thing that I would say is we've had 5 different capital partners through the course of the business, so 4 recaps, and we've never had an investment vehicle that hasn't had at least a 20% internal rate of return on the business. And that has fundamentally been driven by this willingness to pay on the part of the customer, the longevity and the additional occupancy that's been created in that organic situation. So I don't think that at Safe Harbor we are smarter than anybody else. I don't think that we have that we work harder than anybody else. What I do think is that we have found a way to unlock that additional growth that is available to all of us as an asset class as a result of the changing demographics and psychographics that are taking place throughout the world. And I would like to propose to you that these are the 3 major items that have driven that. The first one is specialization. Counter to my own natural tendencies and perhaps some of yours, one of the things that I think works best when an industry looks at itself as allies as opposed to competitors is when each individual operator specializes in the thing that makes that operator the very best. Somewhere in here, Moran DeVort is seated, and he did a wonderful interview with Lorenz Last from Heeson, the new owner of Heeson, if any of you saw that last month. It's about an hour-long interview. But if you go to the middle of the interview, last, who is not from the boating industry, he comes from manufacturing, is asked why did he buy Heeson, and how does he expect to create more value out of Heeson when there's already a great number of fantastic shipbuilders in Northern Europe. Last answers by saying that he thinks the big idea that will transform boat building across the industry is collaboration with other boat builders. And when I heard that, I was amazed, because I realized that his perspective coming from other industries is that this is not a zero-sum asset class. What we have as a challenge before us is to bring more people into it, and the best way to do that is through collaboration. I mean, he was talking about what have historically been competitors in Fedship and Lursen and Ocean Co., these builders who have great technologies, and he was proposing that they pool their understanding of how to serve the customer and perhaps build yachts at different size that offer the best overall solution that requires the least service, that is the most dependable for the customer, because he was thinking at a different level. And that form of specialization, I think, is an incredibly powerful tool. For us at Safe Harbor, it's down to one phrase: building the world's greatest network of marinas. That's what we want to do. So I would love to be Ferretti's network, in which he rolls out his fleet of vessels to move through the network. We want them to have the same experience, high-end hospitality, everywhere they go in the world. That's the view, and we are rigorous about that. And that brings up the second point, which is rigorous execution. If you're going to specialize in one thing and be the best in the world at that, you have to do two things very, very well. You have to constantly critique yourself, and so that means you need a culture of internal dissent, collaborative dissent, and you have to be constantly willing to evolve and change. Competition obviously causes us to evolve and change, but I'm proposing a narrative for the industry of collaboration, and so within that is the desire that each one of us become our own greatest critics, that we would continually innovate and evolve the product so that the consumer has a better and better experience. And then the last one, which may be kind of obvious at this point, is partnership. The thing that I think has made Safe Harbor successful more than anything else is partnership with great allies. That's how we've grown in the United States. That's our plan to grow throughout Europe and throughout the world. And those partners take the form of boat builders and OEMs. They take the form of service providers. There's hundreds of different partnerships throughout our ecosystem of marinas. And what I would say is it's our job and our desire to make them successful. We know that if we make them successful, then the owner will have a better experience. There'll be people who come into boating in greater numbers, and they'll stay in for longer. And so even if it has a cost to us, and many times it does, often it has a cost to us, our goal is over time to create a snowball effect that brings more people into boating. One caution here is that capital, and this I'm speaking from experience on this one because we have lots of outside capital partners, as I'm sure some of you do. The tenure of that capital, the timing of that capital really matters in partnerships. If you have a partner who's thinking short term in terms of the investment they're willing to make into the business, it's going to have a very different outcome than long term. So as you're evaluating the partnerships that will allow you to make a better overall experience, I would just suggest putting that lens of capital partner through that filter. Good news. So this is sort of a good news, bad news, good news presentation. The good news is all of those tailwinds that I described at the beginning are expected to continue. So I've just given a debt presentation throughout the United States, and I went throughout the country and discussed with different investors what's going on in our asset class. And we've done a lot of research with third-party agencies to figure this out. And it turns out that about 200% the non-coastal population is what the coastal population is expected to experience over the next decade in the United States. That's a fantastic thing for us. Moreover, what I mentioned is possibly the greatest driver of behavior, which is willingness to spend on goods and experiences, is supposed to increase at about 18% per year over the next 10 years. So we've seen it happen over the past 20 years. We've seen people be willing to spend and actually spend more on experiences, but we are able to project out through behavior patterns that they, even as they're moving to the coast, and frankly, wealth is supposed to increase at 7% per year in the United States as well, and it's similar in Europe over the next 5 years. they're going to be more willing to and more capable of spending on our types of experiences. So the landscape is set. We don't have to go back and grab the 6 times or 10 times the growth that we could have grabbed over the last 20 years, though I think we should, and I think we could. But these tailwinds will continue to drive a desire and a willingness to participate in exactly what it is that we're doing as an industry. Finally, as my time's up, I wanted to leave you with 3 great questions that we will have to solve together if we are to experience this type of growth that I would like to propose is available to us. The first one is wealth inequality. I mentioned that over the last 2 decades, and really it's been happening over the last 50 years, there's been a divergence of income and a divergence of wealth, and this is a global phenomenon. It's a phenomenon of globalization. It's a phenomenon having to do with the monetary supply, as I previously said. It is incumbent, perhaps most on us, who serve this high net worth customer base, to lead the way in terms of making sure that people are promoted, making sure that they are sharing in the wealth that we are creating, and making sure that they have a chance to participate in the lifestyle that we are building. If we don't do it, no one else is going to do it. We are in the best position visibly to create that for them. And I believe this is both defensive in terms of removing a social construct that could potentially cause harm for the business over the next 20 to 30 years. And I also believe it's offensive, because these are the people that we will begin to build wealth for over the next 20, 30 years that will replace the boating population that's here today. The second one, and there's been much said about this, and I wish I had more time, is our responsibility to our product, to nature, our stewardship of the landscapes and ecosystems in which we operate. Caitlin Ajax from our operations is here, and she runs sustainability for us. I'm very excited for us as an organization to be in this context in Europe, because Europe is ahead, Italy is ahead, Venice is ahead, and they've had very thoughtful and good timing. I appreciate that. We have an opportunity as an industry to lead the way because of the waterfront that we touch in stewardship of the environment. It's visible globally. It's visible certainly to us as our asset class, but to every customer that gets into boating, we have an opportunity to show them what good stewardship looks like in the waterfront. And I really believe that investments that we make into solar, into alternative forms of energy, into alternative forms of taking care of the earth through different plastics, through whatever methods you may have, those will pay dividends over time as we compound and bring more people into the space. Finally, the last thing, is just a proposal I'd like to make to everybody, is that the opportunity to think about ourselves as one group of allies with a backdrop, an industry that is not a zero-sum industry. These are not commodities. This industry will not be replaced by artificial intelligence. The opportunity to collaborate and build something special in the world is unprecedented, I think, in this asset class. And I hope that we will strive together in our time here and in the future to do that as a group. So thank you so much for the time. Sorry about that.